The Forex market, with its ever-shifting dynamics, can be as unpredictable as a wild beast. Did you know the Forex market dwarfs even the New York Stock Exchange in daily trading volume? It's a colossus, a realm where potential profits are as vast as the market itself. For instance, the average daily trading volume exceeds $5 trillion in foreign exchange markets. Yes, you heard it right, $5 trillion. According to industry reports, nearly 85% of Forex trading volume is attributed to major currency pairs riding the waves of trends. In this video, we will discover the profitable Forex trends. So stay tuned with us and watch this video till the end, so you can be on your way to making money in the Forex market. ADX Indicator. You can utilize the Average Directional Index, ADX, to measure the strength of a trend. The ADX indicator can be used as a tool to identify profitable trends, with values above 25 indicating a strong trend. The ADX also helps you pinpoint when the trend is losing momentum and may be reversing. The ADX indicator is just one of many tools at your disposal for identifying profitable trends in the Forex market. It measures both the strength and direction of a trend, making it a valuable tool for traders looking to capitalize on market movements. Fibonacci Retracement levels. History repeats itself. This statement holds even in the world of Forex trading. Fibonacci retracement levels are a technical analysis tool based on the idea that markets will retrace a predictable portion of a move, after which they will continue to move in the original direction. These levels can be used to identify potential entry and exit points for trades, allowing traders to capitalize on profitable trends in the Forex market. You can also apply Fibonacci retracement levels to identify potential reversal points within an existing trend. Look for confluence with other indicators. For instance, if the Fibonacci retracement level aligns with a key support or resistance area, this could signal a strong potential for trend continuation or reversal. Ichimoku Cloud. The Ichimoku Cloud is a Forex trading tool that identifies support and resistance levels and trend direction using 5 lines. It helps traders find profitable trends and make informed decisions by combining multiple indicators into one. Price action patterns. Price action patterns in Forex trading analyze candlestick patterns and chart formations to predict trend reversals or continuations. Traders use patterns like head and shoulders, double top bottom, and flag or pennant to anticipate future price movements for entry and exit decisions. Relative Strength Index, RSI. RSI identifies overbought or oversold conditions in Forex markets, signaling potential trend reversals. By measuring price movement speed and change, it helps traders make informed decisions on when to enter or exit trades, especially when combined with other indicators like candlestick patterns and support resistance areas. MACD, Moving Average Convergence Divergence. You have to pay attention to MACD crossovers and divergences to identify changes in momentum. The MACD is a trend-following momentum indicator that compares the 12-period and 26-period exponential moving averages, EMA, of an asset's price. Traders can use this tool to identify changes in trend direction, as well as potential entry and exit points for trades. A bullish crossover occurs when the MACD line crosses above the signal line on the histogram, signaling a potential uptrend. A bearish crossover occurs when the MACD line crosses below the signal line on the histogram, signaling a potential downtrend. Divergences between the MACD and price can also be used to identify potential trend reversals or continuations. It can indicate that the current trend is losing momentum and may reverse soon, providing traders with valuable insight into potentially profitable trends in the Forex market. When the MACD diverges from price. Support and resistance zones. It is important to identify key support and resistance zones. A break above resistance or below support may indicate a new trend. Support and resistance zones can be identified through technical analysis tools like trend lines, pivot points, and key price levels. These zones can act as potential barriers for price movements and provide traders with valuable information on when to enter or exit trades. It indicates a potential trend, reversal, or continuation, allowing traders to capitalize on profitable trends in the Forex market when a support or resistance zone is broken. Trend lines. Trend lines are a valuable tool in Forex trading. They are drawn on a chart to connect consecutive highs or lows, showing the direction of a potential trend. Breaks above or below trend lines can signal trend reversals or continuations. Traders use trend lines alongside other technical analysis tools to find support and resistance levels and determine entry or exit points. Analyzing trend lines can provide insights into profitable trends and enhance trading strategies. Economic indicators. Staying informed about economic indicators and news events is crucial in Forex trading. Economic indicators such as GDP, inflation rates, and employment data offer insights into an economy's health. These reports can act as leading indicators for Forex trends. For instance, a positive GDP report may indicate economic growth and currency strength, while a negative employment report could suggest weakness. To identify profitable Forex trends, traders must stay updated on economic indicators and understand how they influence currency pairs. Multiple time frame analysis. You have to examine trends on different time frames, e.g., daily, hourly, to get a comprehensive view of the market and identify trends that align. Multiple time frame analysis involves studying price movements in different time frames to identify potential trends in the Forex market. For example, a bullish trend on a daily chart may align with a bullish trend on an hourly chart, providing traders with a higher probability trend to follow. It is essential to consider multiple time frames when analyzing trends and making trading decisions, as it provides a more comprehensive view of the market and can increase the likelihood of identifying profitable trends. Correlation analysis. It is important to understand the correlation between different currency pairs and use it to confirm trends. It can be used to confirm trends and make informed trading decisions by understanding the correlation between currency pairs. Correlated pairs moving in the same direction can reinforce a trend. Correlations between currency pairs can provide valuable insight into potential trend direction. For example, a positive correlation between two currency pairs means that they tend to move in the same direction, while a negative correlation means they tend to move in opposite directions. It is essential to keep an eye on correlated pairs when identifying profitable trends in the Forex market. Seasonal patterns. Seasonal patterns can also play a role in identifying profitable trends in the Forex market. Certain currencies may have predictable seasonal movements due to factors such as holidays, natural disasters, or political events. You have to explore historical seasonal patterns in currency pairs to identify potential trends during specific times of the year. It is easy to identify potentially profitable trends and adjust the trading strategy accordingly by understanding seasonal patterns. Traders can. This is all for now. Hope you find this video helpful. I post new videos every Wednesday and Saturday at noon, so be sure and smash the like and subscribe buttons and turn on notifications. Also, drop a comment below and tell me what you'd like to see in the next video. I appreciate you, and I read every comment.